Welcome everyone to LeapMeet 67, May 2022 TradeLog review and interactive Q&A session. At the end, we will also be announcing our contest winner from previous month, Trooper of the Month, and that'll be all for today. Thank you again for joining on this fine Sunday. And let's get started. Let's take a look at the overall market first, and then we'll go from there. Cool. We're looking at month of May, which started about here. And as you can see, first 3 weeks were mostly downturn. We were pulling back. And then last week of May, we saw a huge unexpected of sort run up towards the end of the week. And as you can see, this is the run up I'm talking about right here, which started about May 24th, 25th, 26th, and 27th. In market made a huge run up, and this is last week, so which is market pretty much is going sideways at the moment, trying to figure out the direction. All three indices are kind of flattening out a little bit, but as you can see, 100-day, 50-day are going lower. 200-day is about to be turning over. Also, month of May, we saw market briefly go into bear market territory. And when I say market, I mean S&P 500. QQQ is already in the bear market, as you can see, 30%. Right now, it's still in the bear market, like about 24%. So even though after recovering, it's still there. But SPY in particular went briefly for like a day, and bulls decided to protect market from breaking that level. Now, as you can see, we have seen this type of run up before right here, as you can see, where market ran up huge for like half a month, like end of March. You guys all remember that, and then traded sideways, and then we saw this huge pullback. Not saying that same thing is going to happen this time around as well, but it's a possibility. We still haven't, the overall trend is still down. If I adjust this one a little bit, and you can see that the overall trend line that extends from this point is still protected. We still haven't broken above this trend line. If we do it, we may enter in a short-term uptrend, but just like how we did it here, this was the long-term trend line. We broke above it and just ran, broke down here. This is a short-term trend line break, yes, but this is the long-term one, multi-month trend line. So if it breaks that, then we may be able to see a direction change in the market, and market start to correct itself on the upside. But month of May is what we're talking about, and that is where we saw it briefly go into the bear market, defended it, traded sideways, and then decided to run on the upside. But throughout the month, as you can see, it started here. Throughout the month, like first week, it went up and then down all the way, and then decided to run up again, and then got pulled back again, almost to the bear market territory, and then ran up again. So what I'm trying to point out here is that market, it's choppy. It's not straight down. It's not straight up. Like 2-3 days, you see a run up, or one day it's green, and then 3 days it's red, and then another 3-4 days green, and then huge pullback, and 2-3 days red. It's all over the place. So when market is like this, our strategy has been working tremendously well, because we are taking it one day at a time. No swing trades, no long-term expiration date. We are trying to close positions on the very same day, because like I just showed you, you have no idea what's going to happen next day. Like huge green candle, almost engulfing green candle. Usually in a strong bull market, if you see something like that, then it's an indicator that this is a formation of a new trend. Or we could see a follow through on the next day because momentum is so strong on the upside, but not in this market. Like huge green, and let's just say you decided to go long overnight in anticipation that we will see a follow through, you will be wrong, and all of your options premium will be wiped out even before you get a chance to blink. Huge green, I mean huge red, and then followed by more red, 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 and red. There is no way you would recover from that. So going into the June, we are probably going to still do the same strategy, where we don't buy long term, we close on the same day. Trust me, it's been working, as you can see, as you will see in the trade log. And when market is this choppy, you are going to get caught in a bad moves, upside or downside. You are going to enter in a position, and then the next day it's going to go against you if you hold overnight. And that's just going to happen. That's the nature of the beast. But we, as a day trader, have to try our best to just follow the rules and read the market and trade the market that's in front of you, and not trying to predict it. I see this over and over and over and again, and like people are like, okay, this is the bottom, this is the top, this is what's going to happen next, this is where we are going to go now. Market is so low, we're going to go up, or market has ran up so big now that we are going to go down. And my advice or my think process here is that why are we trying to predict what market will do next? This is not the market where you try and predict it. This is very, very, very uncertain market, very unprecedented. Like even before this huge downturn started, even before that, it was the same situation. Look at this chop fiesta, or like this one, pull back, bounce back, pull back again, bounce back again. It's like all over the place. So stop trying and predict what market will do next, rather than just take it at a day at a time. Wake up, see how market is working, decide the levels, decide the stop losses, decide your trade plan, decide the names that you're going to focus. Take it a day at a time. And that is how you're going to survive in this market, and not just survive. You will thrive in this market where everybody else is struggling. Everybody is like, oh, today was such a huge day in the market. And then we post our trade and we're like, how? We had 2 or 3 super green trade where we made 100% plus profit. So why? Because we traded the day that was in front of us. We traded the market that was in front of us, and we did not try and predict what it will do next. We just saw that, okay, this is the level, this could happen. And then based on that, we made an informative decision and placed our bet in right direction. And that is what I want you all to keep in mind going into next month as well. And I don't see this market going full on beast mode anytime soon, because there is so much uncertainty, and inflation is a beast that hasn't came out since 2008. And you all know what happened in 2008. So even though you know it, most of you, even I wasn't trading back then. So it's very, it's not, we don't know what's going to happen, right? So please be careful. And like I said, take a day at a time, and then we'll go from there. All right, so let's go back to the trade log review. So week one, May, let me zoom in. So first week, ran up big, pulled back big. So here, okay, here week one. So first we had really nice uptrend here. Fantastic week. Only one green, one red trade that was on Friday, which was a lotto trade. So nothing for us to be concerned about. Lotto trade are just that. Sometimes it works, sometimes it doesn't, and um, that's just the deal. So there's nothing that you can do there. But one thing that could have been better, as you can see, like what we're trying to do is like we're trying to keep the position size that you take. So if you're $700 position, you want to keep that position consistent throughout the day. So so even though we lost $530 because our position size was consistent, we made most of it back. So that day ended pretty much break even at that point. So that's what we need to keep in mind when you're trading, especially on Lotto Friday. So that one bad trade on a Lotto Friday, if you do decide to trade, it doesn't wipe out all your gains. And even more importantly than that is that you have to have stop losses. Here, I did not. So I could have and I should have, but I did not have stop losses here. And because of that, I pretty much lost $500. If I were to have a $700 position, I lost most of my gain from like 4 good trades, got pretty much all wiped out by one bad trade. And that is what I'm trying to tell you guys, to have like stop losses. But in my case, not a big deal. Really great 4 days. Maybe an okay, or like, all right, it's a break even. I didn't lose any money, so I would consider it an okay Friday. So overall, great week. We had several 100% plus winner. As you can see, 105, 180, 254, 100, 100, 100. Another 100 here, 70%. So great week. The month of May started with a bang. And then going into week 2, same story again. Let's go over the week 2. As you can see here, pulled back and then decided to have this small run up on the upside, and then pull back again on, so right here, this is where it ended, right? And so no, right here, pulled back and then decided to bounce back up again. And same thing happened on our TradeLog too. We were playing, as you can see, puts for most part. And then we were trying to do we read the market wrong on Friday, went against it. We were trying to play the both direction. What should have happened here is that we should have stopped after first couple of red trade, or even just one red trade, which turned out to be a pretty bad trade where we lost like 100%. Again, no stop losses. It's hard to play stop losses when you're doing a lot of trades on Friday because it moves so fast up and down. So unless you are super quick about it and just focus on watching every single candle, which I don't advise you to do, it will be very hard for you to manage all this trade very well. So ideally, what should have done here, and believe me when I say that I'm taking notes for every single mistake that I'm making, because that is how I'm going to get improved. So the point and the reason I'm talking about this right here is because I want you to look at your own trade log and do the same thing for yourself. The mistake you made, you should be your biggest critic and you should be your biggest cheerleader. So tell yourself, you should be always telling yourself that, yes, I can do that. But at the same time, you should be able to pointing out your mistake every single time, every little tiny mistake you should be pointing out for yourself, because I cannot do that for you. Nobody else can. You are the only one who can, because you are the one that is trading. You are the one that is making mistake. Nobody else knows what you're doing wrong except you. So you should be your biggest critic. then you should be writing down all these things, because like I always say, if you don't know what you're doing wrong, how are you going to correct it, right? So I have already taken extensive list of notes on my personal trading from month of May. And one of those loans was like, okay, I need to start either having stop losses on Friday, which is not an ideal scenario because it moves super, super fast. So a lot of time it goes down and you miss out on a big move when it run up on the upside. So that is an issue. So what can be done about that? So one thing you can do is that if you have one or two bad trade, just step out. So I had this one bad trade. I had this one bad trade where I lost 100%. And then I had this crowd trade where market went against me again. But fortunately, we were able to stop out, break even. So that was my clue. And I should have stopped trading it there. We should have stopped trading at that point. But no, we did not. And we decided to try it again. Market was super choppy. As you can see, we were playing calls, put, calls, put again. So we're trying to figure out one way where we can make up the money, and we didn't, and we ended up losing the big time. So that was one disaster, one very bad day in terms of lotto playing, and very, very bad execution overall from our part, and just a bad day overall. But what was the good thing about that week? That we had really strong previous 4 days where we made really nice gain, 100%, 155%, even 500%. That Amazon trade that we took, the lotto trade, a lot of you guys took that trade as well. We rode it all the way to $9. Another 285% trade in Amazon, $1 to almost $385 on the very same day. So all this 300% loss that we took here pretty much wiped out by just one excellent trade in Amazon. And that is the beauty of options trading, right? If you're trading stocks, no way in hell you will make 500% gain on one single trade. But in options, even though it's rare, it's possible. So you took three bad trades, 100%, and then one good trade, 500%. You're still in 200% profit overall. So you see what I'm trying to say. It's like you have to keep at it, because you never know when that next big opportunity is to come around. You cannot plan for it. All you can do is be in that trade. And the only way you're going to be in that trade is by following the rules, taking some calculated risk, and keyword here is calculated, and just trading with patience and doing what you do best. But again, so the big two, excellent. One bad day, but overall, as a whole, week two was one of the great week for us. Always. Anyways, Amazon was the big winner for that week again. We have been trading Amazon excellently well this past month, and it has been so volatile that the huge opportunities are there. So even if it's out of your price range, you can still focus on it and be like, okay, when can I trade it? So maybe you can skip it on like Monday when it's like 14.15, even Tuesday it's 13.12 dollars, and as the week progresses, the theta decay is going to knock those values down. Unless we are seeing a huge move in one particular direction, the premium value is going to go down. So if you want to trade Amazon, you can probably ignore it for like first 3 days because your account doesn't allow you to. Now you cannot be stupid and start to trade it, because there's a huge probability, because yes, it worked out for us, but it could have very well, like for example, this 1,700 trade, this $900, or where was it, $1,300, $1,500 trade, it could have gone against an at any time. And if it does, you're essentially wiping out 50% of your account in one trade, which is not a wise thing to do. So that is why you need to be patient and you need to wait for the opportunity to come to you. And that opportunity came on Thursday. $1, $5, $4, $1. Now, those are the trades you should be taking. Now, those are the trades that you should be focusing, getting in and out, in and out, in and out. Even if you didn't take this, for example, this trade, even if you didn't wait for 542%, our first exit was at 160%, which is still fantastic return on your investment. So the point I'm trying to make is that you can pretty much trade any name you want if you're smart enough and patient enough to wait for opportunities to come to you. If you're running after opportunities, if you're trying to take trades that are not there, you will end up losing money. But if you're patient enough, so if you have $10,000 or $5,000 account, there is no way in hell you should be touching Amazon at all this first 3 days. Come Thursday, go for it, right? Take this dollar trade, maybe even $4 trade. Skip the $5 one because it's a little too big, too expensive. But this 3 trades, you could have taken it with peace of mind and then made huge gains on it. So that is the point I'm trying to make. And come Thursday, avoid taking lottos. I don't understand why so many people are fixated on taking lottos. Try it. There is nothing wrong with it. But I have seen it again and again and again and again. People message me on Fridays and Saturdays that, okay, I made huge progress this week or previous 2 weeks, and all of my gain has been wiped out today on this Friday. And I'm like, why are you trading in the first place? Trading on Friday for same day expiration calls or puts or options is not an easy thing to do. You can literally lose money just by sitting there and not doing anything. And even if the underlying stock is not doing anything, you will lose money. It's a very, very tricky business. If you're just starting out options trading, why are you taking that risk? Focus on the other 4 days. There are plenty of opportunities. Like, for example, look at it. This is the $700 max position size. See how many opportunities are there. Look at it. Like PNL, you can make $600 on like all these trades. Skip the big ones. You don't have to take those trades. Same thing. Plenty of trades to take, even if you keep your position size small. So just be smart about it. Don't take exceptional amount of risk because it's not going to get you anywhere at the end of the day, and you will end up losing more money. And this point that I'm trying to make here, I will show you at the end. Anyway, week 3 comes around, another great week, which was from, so guessing 16 to 20th. So let's say right here, 16. So first couple of green days followed by huge red days, and that was the week where we briefly went into a bear market on Friday. So overall, bipolar week, as in it gave indication that it has what it takes to follow through on previous week's one, the first 2 days. First day was pretty break even, made new highs on Tuesday, and then bam. So if you were to go long or buy calls here, hoping that this streak will continue, you would have lost a lot of money come Friday. So that is why, again, trade was in front of you. But anyway, so we were playing, as you can see, calls and puts both, but mostly calls on first day, and then a little bit of puts in Amazon, and it all worked out at the end of the day because we were just playing the levels, resistance and support levels and trend lines and all the good stuff. But one trade that went in different direction was Amazon. That trade didn't work out. We got out of that trade almost break even, and then the next day we entered in Google calls that failed because everything decided to go down from that. So as you can see, we changed our bias and started buying puts, Same thing again, Thursday, started buying puts for most part. And then again, puts for most part. Another excellent week, 3 losing trades, 200%. One, we follow the stop losses. It saved us a lot of money. Why is it 0 here? It shouldn't be 0 here. 1. And same thing here. There we go. Yeah, so it saved us a lot of money here, but for most part, it was a good week. We changed our biases with the direction of the market, as you can see, all puts, like, and then from here, Wednesday, where market decided to change the direction, we changed our bias and started buying puts in all with the market. Before that, we were playing mostly calls, as you can see, because market was going up or was pretty much moving sideways and was a little bit choppy. So we were playing both direction. And that is what you need to do. But for most part, it worked out great, 3 losing trades, but overall we made some really good progress, some good 100% plus trades. We are getting very good at taking this 100% plus winners. Pretty much every week we have them now because market has been so volatile. So if you pick a right name, you can easily get that 100% triple digit gain. Like before, it wasn't this easy when market was even in the bull market, because even though it was going up, the climb was not clear. And that has happened this last month or even this last week as well, where even though market is moving up, it's not the direction is not clear. It moves as if it's going to come down at any time. So you cannot just like go in, stay in, and grab big gains. You have to be very, very quick or just stay on the sideline because market is so choppy. And then come week 4, which was a short week, I believe, only 4 trading days. We did the same thing again. Some good big trades here. But the gains overall were like okay, because we didn't want to take too much risk, because it was a short week. The premiums were acting a little bit weird, and that was from here, I believe, right here, 23, 24, 25th, and 26th, 27th. Right, yeah. From 23rd to 27th, yes, 5 days. How is that possible? Oh, sorry, last week was 4 days week, not the 4th one, my bad. Anyway, there were like 5 trading weeks, as you can see, 5 trading days, as you can see. We still decided to take some good trades. Minor mistake here, Tesla puts didn't work out. It did touch or went almost close to 614 or 15, if I remember it correctly. But after that, it bounced and never looked back, and it's over 700 and went all the way to, I believe, 720 or something, or even more than that. But it never looked back from that, and we were not able to get out of this trade with any sort of profit. We should have. Again, stop losses. We didn't have it, so we ended up losing a good chunk of money there. And then the same thing happened with Amazon puts as well. Went against them in blink of an eye. Markets decided to run in week 4, as you can see right here. This is the week I'm talking about. It just randomly started to make this big run up on the upside, and 2 of our trade got caught in that run up. And then we quickly decided to change biases, started buying calls. As you can see, no more puts, all calls here. We made some good returns on those calls, and most of the losses from these 2 trades were covered within 2 trading days. which is you need to do like don't let one or two bad trades stop you from taking following your trade plans and taking trades and taking advantage of the market if it's going up or if it's dropping big. Either way, like I said in the beginning, there is no way in hell that you will nail it 100% of the time. When market is this choppy and when market is this unpredictable, it's inevitable. You will get caught, and we did get caught in that direction change that happened. Two of our trades got caught, and we didn't have stop losses for it because previously market has been so choppy that it goes down and then it comes back up. But that wasn't the case for this too. So we ended up losing a good chunk of money there. But overall week was decent. We did make some money. And then at the end of the day, the first week of last week was end of the month. Again, 5 excellent trade. Every single one was the green one. And we ended week pretty decently. I'm very proud of this number. We took 106 trades in total. 97 of those trades were winning trades, only 9 losing trades, and 91.5% success rate. Now, anywhere, if your success rate is over 70%, you are a successful trader and you should keep trading. 90% is almost unheard of. 91%, 90%, it's almost, even 80% plus is almost unheard of. It's very, very hard to achieve because market is so unpredictable. And unless you're a scalper, then yeah, it's fine because you're only trading for like 10, 15 cents and that's kind of given. But we're not trading for 10, 50 cents. We're trading for 15, 30, 40% is usually our first exit. So we're not trading for pennies. We're trading for percentage, like 30, 40%, right? So we're still making good trades. We're still making good gains. We're not scalping. And even after that, we are achieving 90% success rate. So there is no way here for any of you to lose money if you're following the rules and if you are trading smartly. If you're trading blindly, if you're blindly following trades, if you're blindly just taking the trades for the sake of it without putting any thoughts behind it or without having any trade plans, then you're making a mistake. And then you are wasting this amazing opportunity because you're being stubborn about the way you trade. You need to be flexible. You need to change your biases. You need to correct your mistakes when someone points it out, and just focus on improving and learning and getting better at trading. Like I personally didn't start with 90% success rate. I got there now, like last couple of years. But I became more and more consistent with time, and I want you all to get there with as little time as possible, rather than taking 10 years that it took me. I would want you to get there in probably 2 or 3 years, but that's not going to happen if you're not trying to learn from the mistakes that I have made. And one of those mistakes was not keeping the trade log. And because I didn't have the trade log, I wasn't able to correct the mistakes that I made. I didn't have any extensive notes to guide me through different period of time. So all this stuff that I'm saying it because I want you all to be successful. So please, if as a collective groups, if our success rate is 91%, there is no reason for you to losing money. There is no reason for you to have any less than 70% winning rate. And then we can go from there. We can correct the mistake. We can fine tune your trading plan. We can fine tune your trading, the decision making progress. That all can happen. But that's micro improvements. But the macro improvements that you need to make is very simple. Follow the rules. Don't hold and hope for. Have stop losses. Don't take trades that are outside of your account size. as much as you want to make $500 in one trade because you're seeing us or someone else make it, if your account is $5,000, you should not be aiming to make $500 from one trade. Your aim should be making $150 or $200 a day and then go from there. If you consistently do that 70% of the time, at the end of the day, your $5,000 account will grow into $10,000 account, and then you can increase your position size, and then it will go from 10 to 20. But you're aiming for those $500 trades right off the bat when your account is $5,000, you will never ever be successful because your approach is wrong. All right. Anyway, so that is the trade log for May 2022. Let's go over our Trooper of the Month. As you can see, already preloaded all the names here, depending on their posts, if they were able to attend the webinar or not, how they interacted with the community, how much they contributed, the messages, the testimonials, and all that. So as you can see, we randomly added all the names here, and we are going to spin the wheel and see who wins. All right, Bachubai was the winner for May 2022 Trooper of the Month contest. Congratulations, Bachubai. I'm not sure if you're here or not, but if you are, then congratulations and good job. Keep improving. I see a lot of you and a lot of these people whose names are here. You guys are doing excellent job. And if you're doing that well, I will be more than happy to take time out of my personal life to help you out if you have any questions. If you're motivated, I'm more than happy to help you out. But if your approach is, we'll see what happens. If it works, I'm just here to follow the alerts and whatnot, then I don't see, I'll still help you out, but I won't be as motivated to stay. Anyway, I think that's it for today. If you guys have now is the time for Q&A. If you guys have any questions, feel free to ask right now. Now is the time where you will get answer to your questions live. So feel free to please ask it.
I think we had 2 questions.
Yeah, what was it?
Chant and one more guy. Yeah, Shinto. You guys had some questions. You may speak up now.
Hi. I just want to ask you about how can we take a strike price? Like, do you have any strategy? I would like to know about that.
So strike price, there are a couple of things that that I personally do. Depending on the market, the day of the week, and stuff like that. The first very basic question that you need to ask, number one, if you're planning to hold that, if you're planning to hold a position longer than one day, then you need to ask yourself, is it possible for this particular name to go to the strike price? How likely it is? So for example, Amazon, if it's at 24.47, come Monday, you were planning to buy calls in Amazon, then you need to ask yourself, if you're focusing on, say, 2,600 calls, right? And you're planning to hold on to it more than one day, then you need to ask how likely it is for Amazon to go to 2,600 before the expiration date, which is 1 week. So how likely it is for Amazon to make $115 move in 1 week? Very likely, right? So 2,600 is a good strike price. Let's move on to 2,650. how likely it is for Amazon to make $165 move in one week. Not as likely as 2,600, but it's still possible. We have seen Amazon make $160 move in one day very recently. So within 1 week, absolutely possible. So 2,650 is still a good price to enter. It's 2,700. Is it a good price to enter? Now you're reaching the top limit of it, because that's a huge move from 2,485 or 2,450 to 2,700. Sorry, I was focused on 2,485. 2,450 to 2,700 is $250 move, which is still possible if whole market runs, but it's unlikely. 2,800, 2,900, 3,000 might be within your price range, but then you need to ask, like $650 move, is it how likely it is for Amazon to make that move? Not very likely. So you want to stick with the strike price that are very likely to happen or likely to happen. And the reason is because every single day, if from Monday to Tuesday, now you're asking the same question. Now, how likely it is for Amazon to make $200 move in 4 days? Unlikely. So the people's interest in those strike price start to lower. And because there is a lower demand, your premium prices will start to fall as well. And theta decay will start to affect those names more severely than the names that are very likely. So that is one thing. Second thing, if you're planning to just buy and sell on the same day, if that is your part of your trade plan, then it's fine. Then you can pretty much choose any strike price, and if the stock moves in that direction, you should be okay. So a lot of trades that we take, the smaller trades that we take are like a dollar trade in Microsoft or Nvidia or Crowd or whatever. The plan is to buy and sell on the same day. So we look at the delta. Delta value is basically determined if this stock moves $1, then the premiums will move by this much. So if your delta value is 25% or 0.25, for every dollar move that underlying name moves, your premium will move by 25%. So by 25 cents. So based on that, you can decide, okay, if I take 3,000 and my plan is to buy and get out in the same day, then you're okay. You can pretty much choose any strike price you want, because you don't have to worry about theta decay. You don't have to worry about it becoming highly unlikely unless it's Friday or Thursday. Then it's a different game plan. So there are several things that you need to keep in mind. But as a rule of thumb, the first question you ask how likely it is or how unlikely it is, and that should answer your questions. And before you ask that question, just ask yourself, am I planning to hold on to it longer than 1 day, or am I planning to hold on to it for an hour? And that is your second question that you need to ask.
Thank you.
Could you review a recommended way to look for confirmation against the levels before making a trade? The level trade out if you ended up so I had a reverse on me, and then so Chuck, there is no sure shot way of knowing where if the levels we provided will work. Most of the time it does. So another few step strategies that you need to do. And one thing that you can do, I think we covered this in several webinar, which I don't remember which it was. But for example, if I say 2,450, for example, in Amazon, right? If you're not confident, first thing you need to do is wait for the trend to form. That is very, very, very important. So if there is no clear trend, then you might be in trouble. So for example, on Friday, there is no, excuse me, once it fell, there was no clear trend. Even though it was going up, it made like about $20 move here, which is pretty much sideways and nothing for $2,400 stocks, right? So when things are moving sideways, you want to avoid taking trades. That is very, very important. People, unless you are like, okay, unless you want to scalp, which a lot of people do, and they're like, okay, this is the bottom of the range, 2430. I'm going to enter at 2430 and then wait for it to bounce over to 2450 and get out. Now that's fine, but the level break plays that you're talking about, you have to wait for confirmation, but more importantly, you have to wait for a trend to follow. So for if I were to say, I believe on was it Thursday or which was it? But every single, I think it was Tesla. Let's see if I can find Tesla. Not on Thursday, but this one here. This is the move that we nailed in Tesla on Thursday. So let's just say the first entry I believe was 750. So when it happens, you can see this clear trend that it's strongly moving up. Now, what you can do for $750, you can pretty much give it like about $3 to $4 confirmation room, which is what I would suggest. So if I say 750, you can wait for it to go to like 753 and then enter. So now if it were to go to 753, you also need to have your stop loss in place, stop loss level. You can be mental. So if 750 is the entry level, then you can tell yourself, okay, if it breaks below 735, then I will get out of the trade. Again, there is no 100% way to know that this level will work. It's a step-by-step process, right? So 750 entry, 740 or 735 would be the stop loss rate, which we'll put it right here. And 750 is the entry. And then the confirmation room is about $3. So first thing first, do you see a trend? Yes. And then you enter in it, 753, and decided to go up. And let's just say you were not confident. So you missed that move. So then it went up almost to 766, which was the resistance level provided. It pulled back. Now you have this trend line that you can do, and then it started to go up again. So in this case, what you can do is you can just draw the trend line like this, right? And so now from here, it pulled back, and you can see that there is a trend line right here that you can draw. Okay, like this, right? Now it started to go up again. It's following this trend line. And now the next level we provided was, I believe, 770. Yes, 770. So it got to 770. Why 770? Because it was above 760. And there is a $4 room for it to move for the confirmation. It went to 770, and look how fast it moved up. Once it broke above 770, it went all the way to about 777 or 775 in a matter of minutes, pulled back again, and then it started to follow this trend line again. Then you just adjust your trend line, and then you stay in the trend. But one of the most important things, or two most important things, level break usually works once we have a clear trend. And then you can just follow it. So if you're not comfortable with, so let me rephrase it. Two type of confirmation. One is the trend confirmation. So let's just say we provided one entry level and it worked. We provided second one and it worked. So now that should tell you that this trend is confirmed. We are going up or we are going down. It could be either one, but the trend in that particular direction is confirmed. So you can probably miss the first entry, but you can take the second one. And then you want to give that $2 to $3 depending on how expensive it is. Now you cannot do $2 to $3 confirmation room for Microsoft because its entire move is $2 to $3, right? So for that one, you probably want to do 50 cents or even 20 cents. So that is the second thing you need to do. You need to give it a little bit of room. And the third thing that you need to do is, even though it's working in trend and we have provided like about 3 entries that work, by the fourth entry, it becomes that much more risky for you to enter because it has already made a big move, right? So you have to be very careful taking fourth entry. Now, I always say what's up can always go up, and what's down big can still go down. So not to say that fourth or fifth entry doesn't work, but if you're not confident and if you're just learning this part, stick to the second and third entry. So first entry will is basically provide you with like some sort of confirmation on the trend. And then the second and third entry, all you have to do is wait for that $2 to $3 room or 10 cents or 50 cents a room for the level break confirmation. And then you can go from there. Now, again, is it 100% foolproof? Nothing is. It's trading. Things can go against you in blink of an eye. So nothing is foolproof. But this is my strategy when I was playing out or when I was trading in the beginning. I would draw the trend line. I will have all my levels written down, and then I would wait for 1 or 2 level to break and then enter in it again. So you can follow the same step as well. Hope that answers your question. All right, great. You're welcome. Any other question? Nothing? All right. In that case, okay, you can do either AMD or NVIDIA. We have discussed about this before as well. The cheap makers, the big players are AMD and microchips. Big players are AMD and NVIDIA. So whichever fits your budget, you can easily take those. AMD pull back almost below 100 recently. So just wait for it. Wait for market for another week or so, see if we continue to move up. And if that happens, then you can wait for a pullback and take the entry. Same thing with NVIDIA. Let's see here. All right, same thing with NVIDIA. The highest for it, all-time high is around 342. It's about 187. Again, if it pulls back, I added some personally around 160 and 170. So if it pulled back and if markets still decide to go lower, anywhere in 150 to 160, 170 is a good place for you to add into your position. It's not a bottom. I wouldn't say that, okay, that's an absolute bottom or anything. If market decide to go down, it will continue to go down. But I do like microchip industry just because it's sort of a recession proof. Although there are companies like Apple and Microsoft are working, and Apple actually successfully worked on their own microchip. So so anything can happen. But I do like those industries. There is a lot of applications for it, strong demand, limited supply, which is a good thing in terms of making it recession proof. So I do like those two names, and those would be the entry points. All right. If you guys don't have any questions, then we'll go ahead and end the meeting here. Thank you again, everyone, for joining on this fine Sunday. Congratulations to Bachubai for winning the contest. And thank you again for joining. We'll see you all tomorrow in the trading room.